Hey, what's going on, guys? This is Jaguar. This is my playbook trade for 11/21 of 2019. I've actually already recorded this video a couple times, but I'm taking too long to explain this trade, and so I want to be a little bit brief. So if you have any questions, just ask me in the forum and write to me or whatever. This is a pretty good trade. This is one of my better trades because I've been doing this trade for a long time. But it doesn't happen every day. It doesn't even happen often. It probably happens a couple times a month, 3 or 4 times a month. And this is an opening drive trade. At least the parameters that I use to define it, it doesn't happen, that often. Okay, so what I'm looking for in an opening drive trade in general is for us to be opening up out of value. So we could open up in range, but we could be at the edge of that range where we are, in range but out of value, or we could be gapping out. So if there's a gap and go scenario, I might want to trade a drive trade on a gap and go. So just to give an example, I want to show a day where I would not trade this trade. So if you look here on Thursday, 11-14, and this was a single distribution day, okay? So let's say Thursday played out, and let's say Friday, just imagine none of this is here, and imagine we're opening up in the center of Thursday, so at 91.25. Because it's a single distribution day, we're opening smack dab in the middle of it. We're opening in balance, like IN balance, okay? So I'm not willing, regardless of what, sets up or whatever, what it looks like, I'm just not going to trade an open drive trade. I'm not going to trade in the first 15 minutes of market on a day that's a single distribution day, that we're opening up in balance, okay? So I just want to be clear on that. So I'm looking to either open up out of value or out of range entirely. So if we look at yesterday was Wednesday, the 20th, we had a 1 distribution, 2 distribution, 3, 4. A 4 distribution day, right? On the profile, you can tell this is a trend day, okay? We reverted back up here to kind of the SOC area, but we have not went beyond this low volume area. So, I'm actually looking for perhaps resistance at this LVN. But if we had a drive movement up, I'm not trading this because we have balance here, we have balance here, we have balance here, and we have balance here. So I think FT will say like those are template days. You could just see by how close the VPOCs are to each other. I don't expect this to drive real hard out of here because there's so much traffic in here. But to the downside, we don't really have traffic until we get back over here. If you look at the VPOC of this day, VPOC of this day, so we don't really have traffic until we come down back into here to the 93s, 95s, 92s. So, with yesterday being a trend day, if we decided to drive and have a continuation of that trend, then I would be looking to go short. But I am not looking to go long in this scenario. Hopefully that was enough context for you guys. If you have any questions about that, just let me know. Okay. So right now we're looking at the footprint. This is how I get into this trade. This is 25,000 volume footprint bars. Okay. Now this is yesterday still. Okay. So the new bar is going to formulate over here, but this is yesterday. And I look at 25,000 volume bars because I need to pause that again. Sorry about that. It's going to go too fast. Because I look at 25,000 volume bars because I want to see how the first 25,000 contracts trade in the market. That's what makes me decide the drive. I want to see how the first 25,000 contracts trade. And what I want to see from those contracts is I want to see at least a 10% delta imbalance. So here it's starting right here, and when that 25,000 volume bar is completed, I want to see at least a 10% imbalance in delta. So I want to see either positive 2,500 delta, 2,500, or negative 2,500 delta. Okay, in this scenario, because I already decided pre-market, there's no way I'm getting a drive play on a long. It's only if they're shorts. I mean, it's only if it drives to the downside is the only way I want to get in. Okay. Now we are we had a test up, but you see we put in negative delta on that test up. We are expanding down here, moving decently upon price levels. It also matters how far price moves, and that's kind of up to you, but I would say a minimum of maybe 3 points. I don't actually I don't calculate that in my head. Sorry, let me pause now. I don't calculate that in my head, but I'm looking for a dramatic move. Okay, you can see here we had negative 29.96, so we have 12% of this 25,000 volume, 12% bearish delta. Okay, that's telling me it's a drive. Actually, the number was really, when you do replay in IRT, sometimes it's not right because of the tick data. The number was actually 3142. It was negative 3142 on the first 25,000 contracts. Okay, so at this point, this is an open test drive to me. I do want to get into the market here. Now, on this second bar, where I get in at is when we breach the low of this first bar. So it's almost like a little breakout of the first 2,500 contracts. Now, normally on the second bar, we get some type of tick back, okay? That is so I try to be patient and have the tick back happen before I get in, because where I know I'm invalidating this trade is we had acceleration right here in these imbalances, okay? That's where the drive really started to be a driving motion, okay? So I want to be in short until we are above 3107. So if we test back up to here and we stay below 3107, I still want to get short, okay? So I try to give this bar a little bit of time, to play out, and then I try to get short as close to the low of this bar as possible, but giving this bar a chance to have some tick back. So you're going to see a red line come across the screen when I actually did get in. Not yet. And actually, sorry, it did not show. I'm in this trade already. I got in where this 873 by 790 is at. I'm in that trade already. Okay, that's the entry. I'm not going to show you how this played out in the footprint. I'm just going to talk to you about the management a little bit to wrap this whole thing up. So I got in. I use an 8-tick stop loss. I have an 8-tick mechanical stop loss, meaning I don't change it based on context, because when we're in a driving motion, in my mind, if buyers became strong enough to push the market 8 ticks against me, then we're not in a drive anymore, because I really want to see imbalance. I want to see, one side dominating a unidirectional move. Okay. So I have an 8-tick mechanical stop loss, and I just leave that there. And this trade is pretty easy to manage, because it's almost a set it and forget it type of trade. Now, my first target is 10 ticks away. So my first target is slightly beyond my stop. And so what that does is makes the trade, as long as I get that first target, then I could get stopped out and I still could cover commissions and everything, and I'm good. Okay, so 3101.75 was my first target, which was 10 ticks. Okay, now let me pull up this. Now, how do I go about deciding what my second target is? And this is a point of emphasis on this trade, because it's what makes or breaks the trade. I want to set it up to where I get out at the next key level, meaning the next key high volume node. Okay, and for me, that's this area. You see we had an MC point of control here. You see, just literally, you can tell there's a high volume node right here, stock zone right there. A lot of people might say, well, why wouldn't you get out at 97? Or why wouldn't you get out at 100 even? Because aren't we going to have support in these areas? And to me, no, not on a drive. I mean, we probably will have support there, but I expect the market to eventually get to one of these lower levels, because, like I said at the beginning, we have VPOC here, whatever. I'm expecting to go from one point of balance to another point of balance, just like we did yesterday, actually. And so I'm trading this trade. I'm not going for 97s and I'm not going for 100. That would be a different type of trade. I'm going for an extended key target. The keyword being key, and what I call a key target is something that I already pre-identified in my pre-market. So I already knew this was more of an extended target for the day in my pre-market when I wrote it all up. Okay, so I actually originally set my target at 94.50, but I got out at 95.25. Okay, right at this little ledge of volume here. If you guys can look at today's action and see, I did get those targets. This was actually a pretty good trade, and it only traded just maybe, I was probably 5 or 6 ticks off of the low. So I did a pretty good job at defining a target. Hopefully that's clear. I just want to be clear about how I set up my stop and I found my targets and how I go about that. This trade is made so I could get extended targets. It's not to just scalp a couple points, So that's my playbook trade for today. Hopefully you guys enjoy that, and I'll talk to you later. Thanks.